Good afternoon, traders. Russell Sandiford here for your easyMarkets weekly outlook. Just to cover off last week, of course, the US dollar definitely finished with a big bang there. The GDP number at 3% is very solid, certainly gives us a lot to think about, and more importantly, it does kind of put that 99% probability of a US Fed rate hike in December at exactly that, about a 99% probability. Now, there are a lot of key risk events coming up this week. Not a great deal today here on Monday for your start of the week, but starting from tomorrow, we've got the Bank of Japan, of course, out with their policy statement. Nobody's expecting them to change much at all for any time soon for the dollar yen. The dollar yen for mine, with Donald Trump doing a bit of a tour of duty this coming fortnight in Asia, in Beijing, as well as set to get across to Japan and South Korea. I do think there is a bit of risk skewed to dollar yen downside there, with the potential for North Korea potentially sitting there rubbing their hands together and waiting to instigate that North Korean issue again whilst Donald Trump is on the ground in their neck of the woods. So I don't want to speculate, but I am cognizant of the idea that that may go on. So I'll try and probably stay away from dollar yen this coming week. It will be an interesting one to play out at the end of the week if we do get through for your non-farms Friday. But look, there's a lot of action before we get to Friday. Wednesday is a big one. I know a lot of traders are looking at this FOMC meeting as a non-event, but bear in mind, guys, on Wednesday, we get that FOMC meeting. We also get the interim non-farm payroll data for the US. Now, at the same time, or very shortly after that, we may get Donald Trump out with the new Fed chair announcement. Realistically, it's down to two, which is Taylor, who's very hawkish US dollar, generally speaking, and Powell, who's quite dovish. He's quite neutral. He's actually much like Janet Yellen and much of the same. Now, technically, Donald Trump has said it's down to three, which also includes Janet Yellen, but I think most of us traders are putting a line through that idea, and the market is almost guaranteed to be thinking there that he will announce Powell as the new chair. What will that actually mean? It should mean strong for stocks. US stocks don't need a reason to keep rallying, but that would be a reason for them to keep rallying. It should actually be a little bit US dollar negative compared to Taylor. So be careful there, guys. I think getting into this long US dollar positioning is actually a very crowded trade. So for mine, let me get to some specifics. For mine, I think that's how it may play out this week, which is a little bit of a US dollar long profit-taking scenario. What does that mean specifically? The Aussie may get a lift from where it is there around that 76.75 level, may get a lift back up to 77.30. A key level in my mind always on the Aussie, again, is 77.30. For the euro, look, I don't think it can get back to 117 because the ECB last week put a big exclamation point on their ideas about not moving that QE scenario anytime soon. But I do think perhaps it can get back to 116.80 or thereabouts. So there is a nice scalp trade there potentially to play out that US dollar profit taking. Shifting across to Thursday, very big day Thursday. We've got the Bank of England interest rate announcement. Okay, now the bottom line there, the sterling is still very cheap in my opinion at 131.25 or thereabouts. For mine, that can see a lift back to 132.5. Easily. Now, the only thing is they have telegraphed, the Bank of England, they have telegraphed this interest rate move. It's not a guarantee that they'll actually move on rates. They can always hide behind the Brexit ongoing undecided nature there of their negotiations for Brexit to actually not move rates. That would really hurt the sterling. I don't think that's how it will play out. I think the sterling gets back to 132.5 this week. And now, look, if you're going to play long against the US dollar, you have to be very careful because the non-farm payroll data, the US jobs data that we get every month, the headline number is supposed to be a bumper plus 300,000 new jobs added. Now, if that's how Friday plays out, I think there could be a lot of positioning before then to actually make money in the meantime before that number hits. But again, Wednesday will be a pivotal one because as well, we may see the interim non-farms data as good for US dollar. We may see as well the tax reform progress story start to flow through the newswires as well. I'm not sure that I want to be too long the US dollar leading into an announcement where the non-farms payroll data is supposed to be this big. For mine, I've seen this way too many times where the market has priced that in fully, and we kind of have seen that scenario play out late last week, particularly with that strong GDP data on Friday. That leaves the US dollar ripe for a pullback, for profit taking. So where can you play that out? For the gold traders out there, gold will probably knee-jerk higher and get back to around that 1280 level, which I've been calling for a long time on the easymarkets.com.au website in our analysis in relation to Powell being the new Fed chair. But also Bitcoin has ripped through to new highs around 6,300 over the weekend. That can be another mover going north again. The best way to play this week, in my view, is some short-term trades between now and that headline US data, seeing the Aussie perhaps push back, the Euro push back, and definitely before Thursday for the sterling to push back to 32.5. Now, I don't want to leave out two other important markets. One, oil. I've been calling that to $55 for a long time. We've finally got a solid base there at the $52 level, and last week saw a move up to 53, 54. That is a very, very big move and can keep going to 55 or even make a run higher. So I'm loving that long oil trade, and I'll stay in that. Now, on the other side of the markets as well, you've got dollar CAD and the Kiwi. Dollar CAD is on a knife edge this week, guys. It is one that I think, it is a pair that I think will lift back to that 130 level. Dollar CAD as we speak is at about 128.30, so that's a marvellous trade if it can get back to that milestone 130 area. For mine, that will happen. Now, twice this week, on Wednesday and Thursday for Sydney time, you'll see BOC Polos out on the newswires. He has the potential to help that dollar CAD move back up to 130 if he starts throwing water on the idea of another rate hike for the Bank of Canada this calendar year. We pretty much know the US will have to move on rates in December because the US data points are very good. So even if we get a miss on Friday's non-farm payrolls, the December story for the US dollar should see that as a midterm trade for dollar CAD, like I said, back to 130. Now, last but not least is the Kiwi. It's under so much pressure. For a long time, I've been talking about that benchmark key level that seems like a price magnet being 68.50. Now, we did see a little move just below that earlier today in a very quiet start to our trading week. So look for more Kiwi dollar softness to play out. If that non-farm payroll data Friday is good, traders, then the Kiwi will be the first, biggest, best target to hit short, and it will take a run much lower. As always, keep nimble, but again, I think the Kiwi is under pressure, and if you're not a short-term trader, the Kiwi against the greenback short seems like an obvious move to play out over the next 2 to 3 months. If you need a hand, by all means, just reach out to us here at Easy Markets.